I'm going to walk you through how to know if the market is crashing or if it is a dip that's going to recover so that you can take advantage of. Too many times people see the market going down red, they enter a trade only for it to continue to crash and them to lose thousands of dollars. And I've done this tons of different times. Now, I cannot guarantee that you'll be able to predict the market perfectly every time because nobody can, but I want to show you some things that will help you understand if the market's going to bounce enough so you can capitalize on it. In this most recent downtrend, I actually got into trades down here, and that's led to me making about a $1,174 return just from this small bounce. And so I want to show you exactly how I was able to do that. So there are some rules we need to follow when we're understanding, is the market crashing or is it just dipping and going to recover soon? Number one, we need to understand what is the overarching trend? What is happening in the market? And so what we do by that is we go into a chart. For instance, TradingView is what I'm looking at here. We go to the daily time frame, the 1 day, and this shows us long-term what the market is doing. Right here, I'm looking at the S&P 500, and we can see that long-term, the market is going up. And so what we do is we connect all the bottoms. And so when we connect the bottoms, we tend to see where that trend is going. So if I connect the bottom here, you can see that the trend line is going up. This line is moving higher, which is showing me that we're in an uptrend. And if we're in an uptrend, more times than not, the market is going to bounce. So that's one way to know and give you certainty if the market's crashing or not. Now, if the market is already on a downtrend and it's continuing to move lower, then it's going to continue to move lower until it hits some point. And so those points are called support and resistance levels. So we also need to have a good understanding of what those levels are. So where do we draw support and resistance? We draw them at prior highs. You can see here, the market topped out here, topped out here, topped out here. No, it doesn't need to be a very precise, very specific level, just in general, a general area of where the market has had a hard time in the past. And so I'll do the highs here. I'll do the next highs here. Again, we're not here yet, but the highs like this. And when I know that there's previous highs here and there were previous highs here, this now becomes my new level that I'm watching as support. And that's exactly what I drew out here. When the market started to turn over here on this red day and this red day, I thought, you know what? There's prior support here. There's prior levels here where the market went more range bound. And that's how I had my guess that the market would pull back to this level and bounce around here. And so every time I'm looking at will a market bounce or not, there is one crucial thing I look at, and that is this. I look at a main pivotal area. And so this area that I looked at for this specific marker was this line right here. And so the way that I draw out these lines is I come here to the drawing tool. I can draw out a rectangle. And what I do from here is I draw a rectangle like this where that support zone is. And I say like this, as the market crashes down, if it comes into this zone and bounces back above it, I know that I'm probably going to have a higher likelihood of it bouncing and continuing higher. If we break below this zone, then I know, hey, the market's probably got some more room to go down, and that's how I understand the different levels. So what you do is you look at the overall trend. If the overall trend is up, you have a higher chance of it actually continuing after the bounce. If the market is at a pivotal support level and you draw out a zone and it goes into the zone and then bounces back above it, that's a very good sign the market will continue trending up. If it breaks down below it, that's also a sign it's going to drop, and you need to have plans there as well. And then once you do that, the next thing you're watching is that next resistance level, the part where it pulled back from. You want to see if it can break above it. If it can't, we're probably going to be returning back down. If it can, we're probably going to be continuing back up. So those are the three stages I look at. What's the overall trend? What's the support zone that I'm looking to target? Are we bouncing there? If so, can we get above that previous resistance level? And we just do that time over time. An uptrend is simply consisting of levels in areas where the market makes higher highs and higher lows. So what I mean by that is we come up, we bounce, we come up, we bounce, we come up, we bounce, and does that over and over. And that's what an uptrend is. As soon as the support line doesn't hold and it breaks through it, that's when the trend changes and we move down, and that's when we do different strategies. But if you're looking to know how to know when the market is going to crash or when it's going to dip, this is the best way I do that.